We're going to start with our opening Tech Investment Outlook 2020 panel. And we've got a fantastic lineup of panelists for you this morning. We have Alicia Aaron, who is a Director of Investments at Nest Ventures. Alicia, thank you very much. Come on. We have Michael Feldman, who's Managing Partner at Cookieman & Co. Michael, thank you very much. And we have Chibo Tang, who's Managing Director at Gobi Partners. Chibo, thank you very much. Melvin Chen, who's the CEO and founder of Starlight Capital, is on his way. It's a very busy time of year. He's been slightly held up this morning, but he'll be around at the conference later. He's having some meetings and things like that, so please do make sure you grab him and have a chat with him if you would like to do that. But panelists, welcome. Thank you very much for coming this morning, bright and early, for this panel. We're going to be talking about sort of, appetite for the sector, where we are in the cycle, what's getting you excited right now. But let's just start, Chibo, at the end there. Let's just start a little bit about, so Gobi Ventures, you're also involved with the Alibaba fund. Can you just tell us a little bit about what you do and what's getting you excited at the moment?
So I guess just real quick, so I'm with Gobi Partners. We're an early stage venture capital firm based in China, invest regionally around China, Hong Kong, and Southeast Asia. So we have about $1 billion under management. Here in Hong Kong, we manage the Alibaba Entrepreneurs Fund, working very closely with, obviously, Alibaba to invest in local Hong Kong startups and to support the ecosystem. We've made close to 20 investments over the last 2 years here. I think we're probably one of the most active investors in this area. I think in terms of what interests us, one of the sectors that we're really looking into is AI, because obviously that's an area of great interest to Alibaba, both as a group and then also as a sector. We think that that's something where Hong Kong can really put a flag in the ground and kind of create an area of core competency. So that's something that we're looking into. A couple weeks back, we actually announced the establishment of Hong Kong AI Lab, and that's with Alibaba, SenseTime, which is one of the unicorns here in Hong Kong, and Science Park. So it's kind of a triple party-led initiative, and we're very excited about that. So hopefully you guys can look out for more in the coming weeks as well.
For those who don't know, tell us a bit about SenseTime. What's their focus?
So SenseTime is an AI company, and they're based here in Hong Kong, Science Park. Alibaba led their last round, invested like 200-something million US, and they're in the market now, raising another one. Basically, they're like Face++ in China, doing kind of vision, computer vision and kind of AI technology.
Computer vision seems to be the sort of key.
I'm actually pitching a deal to SenseTime right now. If you can help out with that, that would be great.
See what I can do.
Fantastic. Just to go back a step, though, you talked about you got about $1 billion under management there, 20 investments in Hong Kong so far. What's your typical sort of investment deal size? And
So for this fund, across all our other funds, we're usually early stage Series A focused. For this fund, it's a little bit of a different mandate. So the mandate here is really just to invest in kind of local Hong Kong entrepreneurs, local startups here, and really just give back to the community. So in terms of kind of the direction and the strategy, it's more broad-based. So we look at pretty much most sectors. It's best if they have kind of a connection to the Alibaba ecosystem, but as everyone knows, the Alibaba ecosystem is very broad. So basically we can invest in pretty much anything. And then in terms of investment stage, we've done angel seed round deals, and we've also kind of participated in Series C and later stage deals as well.
What's the biggest single deal?
So we invested in kind of WeLab and GoGoVan. And so those were probably in their most recent rounds, and most likely their last private equity rounds of investment.
Fantastic. And Michael, tell us a little bit about Kukuman & Co. and what's getting you excited right now.
Kukerman & Co. is a venture capital fund and investment bank based in Tel Aviv, Israel. So we have a $200 million fund, which is operated with China Everbright. So it's kind of like a China-Israel fund. Most of the LPs are Chinese, and we invest. We like to really take a significant kind of role in growing the company and helping them expand to China. My role is more on the M&A and fundraising side, so we do a lot of M&A advisory and venture capital fundraising for tech companies in Israel. We do a lot of healthcare, and I think the healthcare market right now in China is really booming. There's serious demand to improve the way that things have been done there. So we're seeing a lot of interest in some of our Israeli healthcare companies from the Chinese market. Also, the kind of agriculture-related companies are very much in demand now. You know, Israel is one of the world leaders in kind of water and agriculture, and all around Asia, they're really trying to improve, the yield from farmers and kind of modernize that. So those are kind of two sectors we're seeing a lot of demand right now.
And I guess the China-Israel link, the idea is you create these companies in Israel, sort of test them out, incubate them in Israel, and then use China as the sort of place to expand and scale.
Yeah, traditionally, most of the Israeli companies have looked to the US. That's kind of been their closest partner, or to Europe. And now more and more of them are seeing that actually China may be the best market for them. And now it's a lot more open. It just used to be almost impossible, really, to figure out how to get into China. But now there's a lot of strategic investors who want to help you get there. So it's gotten a lot easier than it used to be.
This might be a tricky question, but what's the sort of size of the market for healthcare tech in China, do you think? And how has that grown over the last few years?
I'm not actually a healthcare kind of expert. So we have a healthcare team who really kind of of PhDs who kind of does the vetting. I do know that China has loosened the regulations to make it much easier for drugs to be approved and to use overseas clinical data as part of that. So they have definitely expanded the market greatly recently by kind of softening the regulation to allow Chinese people to have better treatment.
Mm. But the potential is clearly huge. Rising middle class, all those sort of buzzwords.
Correct. And it doesn't have to be only China. Southeast Japan has a very much aging population, and pretty much all around Asia. But China is obviously the biggest, and if there's strategic money from China, it kind of makes sense to use that angle.
Absolutely. Alicia, tell us a little bit about what you're doing at Nest Ventures, and how's the mood?
So what we do at Nest is we support entrepreneurs through a few avenues, one being early stage investments. We tend to look at late seed stage startups. We also support them through corporate-backed accelerator programs. So we work with a number of different partners across different verticals, primarily fintech, health tech, and smart cities. And we also have a space called Meta, which is kind of an offline-online community membership club for entrepreneurs in the broader innovation ecosystem. And what's getting us excited, I'd say, like I mentioned, we do work with a number of corporates and across different verticals. And what we see as a common theme is that a lot of these corporates really are looking for ways to more effectively collect, manage, and leverage their internal data. Whether that's for purposes of creating workflow efficiencies or for being able to target the right clients at the right time with the right product. And a lot of the startups that are addressing these issues are also incorporating some element of AI into that. So kind of in line with what Shiva was saying previously. And that's an area we're excited about and that we're really looking into. As a good example, there's a company in one of our programs right now that is effectively, I'd say, an AI-powered data analyst. So where you usually would see in business intelligence units a number of data scientists working in these teams, they're kind of automating a part of that process using natural language processing to understand queries, big data analytics, and then they're coming up with responses and visualizations to kind of make these analysts more effective in their jobs.
And for the companies who you work with, how are you finding the availability of finance to then take them on to the next stage? Is that
So that's part of what we do in these programs is, at least on the venture side of the business, which is what I represent, we really try and help all the startups in these programs access that capital, whether it's through our partners that are in Southeast Asia or in Hong Kong, as well as in Israel and in other ecosystems where they're looking to fund startups at different stages. We do work with, like I said, we focus on late seed startups, but we do have companies in our programs that go up to Series B.
And what's the appetite for investors to come in there at sort of Series B and Series C for the companies you're working with?
We have a few specific partners that we generally work with for those stages. So usually there's a willingness to meet if it's within their mandate. But yeah, we've seen a lot of them, the Series A stage especially, getting funded through Series B.
Fantastic. So we mentioned there AI, healthcare, agri, data management, sort of things. Some of the sectors that are getting people excited right now. But where are we in the overall sort of tech investment life cycle? Where are we in the cycle? Last year, people were saying it's getting a bit too bubbly. Then obviously we've had the crypto situation. Where are we now? Jibo, do you want to?
Well, obviously, I mean, if people are saying that it got a little bit bubbly last year, and then crypto happened, it only got more bubbly, right? I think we're kind of deep into the cycle, to be honest, and I think that a lot of people, especially here in Hong Kong, I mean, there's been a few listings of internet companies here. I think that there are still a few more on the horizon, very big companies coming out of China. I think people are kind of looking at that with some expectancy, and once those hit, I mean, I think that we'll see what happens. I think from our perspective, we've continued to invest. Last year was a very busy year for us. Made like 12, 13 investments here alone. More obviously in China and Southeast Asia. This year, I mean, this first half of the year, I mean, I think it's markedly slowed down. And I think that that's been a factor of the market, maybe. That's maybe a factor of deal flow, but I think, I mean, in general, that's been the general feeling. A lot of funds have slowed down a little bit. Going in the second half of the year, I mean, I think it might pick up a little bit. We certainly are. And, I mean, you mentioned crypto. I mean, I think that's something that has perhaps impacted a little bit, but not quite as much as most people would attribute. So,
was crypto more of a retail rather than institutional play?
So. Oh, for sure. I mean, you don't see many of the institutions putting too much capital to work here at all, so far anyway. I think it's still very early.
But so some of the things that might have been pressing on the, bringing the market down, is it more looking at things like what's happened with Facebook and this, the Cambridge Analytica scandal and things like that, where, there's been some little things niggling away?
Yeah, I mean, I think it could be some of that. I mean, I think also some of the other companies that I listed earlier this year, I mean, their performance is kind of less than ideal. I think that, at the end of last year, I mean, some of the Chinese companies, they performed quite well. I mean, a bunch of my hedge fund buddies made, did quite well off of some of these big internet companies, right? This year, I mean, some of the new ones that came out, I mean, they're not doing as well, and that could have an impact. Early stage, obviously, I mean, you're further away from that game, and so you continue to invest. I mean, some valuations may push forward, but to be honest, I mean, it's really a factor of how much capital is out there, and there's still a lot. So.
Absolutely. Michael, what are your
Yeah,
thoughts?
I would definitely agree. I think we're quite late in the cycle for the tech investment cycle. And I think you can't separate the tech investment cycle from the overall economic cycle that's happening in the world, which is usually led by the U.S. And the U.S. is, in its second longest expansion since World War II. We're coming up to 10 years, and that's generally, people are expecting a recession is going to happen in the not too distant future. And I think the technology investment landscape will definitely follow what happens in the overall economy.
But what's going to cause that? Are we just being overly pessimistic based on history? I mean, I know you don't want to go against history necessarily, but economies seem to be doing quite well at the moment. Why is everyone suddenly going, oh?
They're always doing quite well before they drop. Who knows? I mean, David Rubenstein, the CEO of Carlyle Group, he was on Bloomberg last week saying the same thing. There's going to be a recession in the next couple of years. He doesn't know what's going to cause it or when it's going to happen. Maybe it sounds pessimistic, but if you just look at history, it's kind of like we're due. Whether it's going to be trade war, whether it's going to be whatever it is, but it's just part of the cycle.
Private equity, people like Carlyle, they love a recession because that's when they pick up all their bargains. They love it. Anyway, don't listen to people like that. But anyway, Alicia, what's your mood on where we are in the cycle?
Yeah, I agree with largely what these guys are saying. I would just add that I think it's also interesting to look at where specific markets and specific technologies are in that life cycle as well. So, I think you could say that if you look at blockchain, we're still kind of in that hype phase where we're trying to figure out where the most applicable use cases are for that. And then if you look at a market like Southeast Asia or Hong Kong, we're starting to see some big wins in these regions. In Southeast Asia, if it's Grab or Gojek. In Hong Kong, SenseTimes, and Prenetics is doing quite well. Companies like Klook, WeLab. So I think things are moving positively in these regions, and I expect to continue to see that happening for a while.
I mean, when one looks at the overall investment market, so much of the tech sector is, the index is driven by the FANG stocks. That actually, there are definitely individual sectors that are still, have plenty of upside potential when even though the index might be being dragged down by Facebook selling our data when they shouldn't have been, things like that.
I think a good example of that is some of you might have seen the scooter battle going on right now in the U.S. with Lime and Bird. And Bird just came out yesterday. Bird is raising money at a $2 billion valuation when a few weeks ago it was $1 billion, and then a few months before that it was $300 million. So there's definitely micro pockets of froth out there.
And you've both mentioned, all three of you actually have mentioned AI. Are you seeing sort of, what is driving your interest in AI at the moment in particular? Because AI is obviously a massively broad sector. Which parts of AI are getting you excited, and what are the business models behind that?
Before I kind of address that, I just kind of want to apologize for kind of setting the tone on the last question. I mean, maybe it's like the ceilings are a bit low here, but no. I think that obviously you walk around Hong Kong. I mean, consumption, everything. I mean, I think the market's still good, and there's still a lot of investment opportunities out there. So for AI, I mean, I think obviously that's a huge term, huge sector. You can't really pinpoint. It's like blockchain, right? I mean, you think about blockchain, think about AI. You can't really pinpoint what exactly that is. I think for us, I mean, we're looking at more of the application level, and so we're looking into kind of fintech. We're looking into for healthcare, right? We're looking into fields where there are existing big pools of existing data that you can kind of leverage to apply machine learning, apply algorithmic processes, and kind of really kind of build products around that. And I think it's more around the software and the SaaS models and things like that, more enterprise related things.
Yeah, one good example from Israel is a company called Zebra Medical, which is doing kind of medical scans using machine learning and image recognition, and they're charging hospitals $1 per scan, and they're getting results that are far superior to what the human eye would be able to judge. I think that kind of thing is a great development in the world.
There was a company, I think, in Hong Kong as well, wasn't there, doing the radiology, the knee scans on the knee, which was...
Doctors are also being displaced along with the rest of us, but it's for the greater good.
Well, no, but it cuts down the waiting times. It means the radiologists can get through more scans and get more patients through the door, and therefore possibly more money if they're charging them. Anyway, do we have any questions from the audience as we go through the conference over the next couple of days? We want to have lots of questions from you guys as well. There's a lot of expertise in the room here, so if you do have a question, please raise your hand. Peter, a question here. Can we have a microphone?
Thank you. Good morning, Peter Kwong, Alpha Group. Just a quick question. If you can just sort of paint us a picture, like for example, how does the next 10 year look like in terms of the technology? Like for example, I do know that like by 2020 is going to be like driverless. Well, there's actually driverless bus in Shenzhen just across the border right now, but driverless trucks. By 2023, I believe there's going to be like cargo planes. It's going to be pilotless, and cargo ships across from like Pacific Ocean will be crewless. So, along those lines, could you just sort of paint us a picture in terms of what would like 10 years from now the world would look like? Thanks.
What would it look like? And I guess which sector would you be picking to invest in maybe as well?
Yeah, I think transportation is undergoing a huge change, like you said. I mean, the way we're going to get around in the next 5, 10, 20 years is going to be radically different than we are now. There's even things like the Hyperloop and the Boring company from Elon Musk. When and what it's going to be, I don't have the ability to say, but I think maybe supersonic air travel and these types of things. Transportation is definitely something that I think is undergoing huge change out there.
It's definitely going to look like Star Trek.
So you can beam me up from New York to LA, yeah?
Maybe.
That would be ideal. Another question here? No.
Hello. Thank you. I'd like to ask some question about the educational technology. Can you tell me about this sector? Because I think that in the world we have some underestimation of this sector, because we have the development technologies in AI, and all people are aware that the modern system of education is like flawless, and I mean not flawless. I can see this trend in investment for the education technologies to evolve. Can you please highlight something on that?
Any of you invest in ed tech?
I mean, so we've looked at it, and obviously, I mean, I think the existing infrastructure and the incumbent systems kind of are a detriment to the progress of EdTech, right? I mean, I think that there are a lot of existing stakeholders that make the implementation of these technologies a little bit difficult, especially in places like China, where the education is more, a lot of it is state-run, and there are, well, actually, I mean, I think most places are like that, and so I think, I mean, there is opportunity, I think, for internet, for kind of, I don't know, live stream, for these different technologies to kind of impact the way kids learn. And I think that you've seen like companies like VIPKid or kind of, like cross-border tutoring and kind of things like this. There's definitely opportunity. I think from an investor perspective, I mean, we really just need to pick the use cases and kind of the right age groups and the subject areas where these technologies can actually make a difference and not clash so much with existing kind of players and more be a complement to what they offer.
Isn't the university space level where it should be focused? Because that's the area which seems most ripe for disruption, where you have people paying tens of thousands a year to go to university, and they're barely meeting their tutors, and it just seems to be a broken system. That seems to be the natural space for that.
Yeah, but again, I mean, I think that like, so I had the privilege of going to kind of a good brand university, right? And I think that society still gives certain value to those brands in those institutions. Whether that's fair or not, I mean, who's to say? But I think that if these are the universities that kind of step out and like take on these new tech initiatives, I mean, I think that that's something that will go over well. If it's a kind of a startup with no kind of existing legacy or kind of, you know, branding or whatever, I mean, I think that it will still be viewed as kind of a complement or supplementary type education that may not be, you know, as accepted in the mainstream or be as attractive.
You almost need the you know, major companies to step up and yes, you know, to help develop their talent pool and fund these things. But anyway, there's a whole another section. Question.
Good morning, I'm Benoit from Accru. I had a question for the panelists. Michael, you mentioned some PhDs on your team. So I had a question for everyone about how data-driven is your venture investment process? Like how much data, how do you go about that thinking process? And yeah, we might be able to help, just so I'm curious.
Ours is not very, to be honest. We're kind of an old school institution. We do generally old school type deals, and it's still done mainly based on, you know, the feeling you get from the entrepreneur and kind of a few people sitting around and discussing the pros and cons. We're not really crunching data. I know companies in Israel that are doing that a lot more, but for us, we're still very old school.
Do you fear the sort of rise of more, you know, AI-driven investment funds taking your jobs? I'll take that as a yes.
Yeah, I think so.
Any further questions? Any more
I
questions?
think they'll be as interesting on a panel, though.
No, absolutely. Absolutely not. Well, we've only got sort of about a minute left to wrap things up. For those who are interested in EdTech, there is a panel at the end of the day tomorrow at 3:30. So do please come along for that if you want to know more about EdTech. Fascinating subject. But to sort of finish things off, let's sort of end on a positive note. If you were to pick one sector to really put all your money in, you have $1 million of your own money, and you're going to whack it into a sector that you think is going to be hot over the next couple of years, what would it be? Alicia, let's start with you.
Sure. I think personally for me, and this probably goes along with a lot of people in this region, so it's not that different, but I would say fintech is still a big one. I think given the markets that we operate in, you know, being Hong Kong, China, Southeast Asia, there's still so much opportunity to really bring people into the fold and provide services that they don't currently have access to, as well as providing corporates and institutions with a broader market share.
I personally like the food sector. It's not, you know, necessarily like hardcore tech, but the new type, you know, plant-based protein and these new types of more sustainable food, I think has a lot of potential to grow, and I'm particularly interested in that.
Cool.
If it's personal money, am I allowed to say crypto?
Absolutely. Absolutely. Time to jump back in, yeah? Okay. Well, actually, interestingly, we've got a session at the end of the day today as well from Brad Barbera, who's the Director of Innovation at the Good Food Institute, looking at clean meats for the 21st century. So talking about all those sort of, you know, how to make meat without having to kill animals, which is a good thing, surely. But that brings us to the end of our panel there. Some interesting insights there. Thank you very much for all your questions. Can I have a big round of applause for our panelists?